Well, a new way to get a payday advance is emerging in the area of finance called fintech. And these financial apps aren't banks, but they do move money around, and they're striking up controversy nationwide. Fox 5 Team's Dana Fowle has both sides of the story. Dana?
Yeah, and I think most of us at some point in our lives have struggled to make it to payday, and an advance on a paycheck would have helped fill those gaps, wouldn't it? Well, today a new area of finance is helping to make this happen, but here's the problem. These companies claim, no, they're not offering loans, but consumer watchdogs say, sure they are, and liken them to payday loans, which in Georgia are illegal.
These products really are payday loans.
Liz Coyle is the executive director of Georgia Watch, a consumer watchdog group.
If you'd like to go ahead and go over your bill with us.
Noonan State Senator Matt Brass sponsored a bill last session that says the opposite.
There are some that consider it to be payday lending, which I do not, because this money has already been earned.
These fintech products are earned wage access providers. There are a lot of them out there, but this one, EarnIn, was a hot topic in the 2023 legislative session. They wanted a definition on the books that does not include them in the loan business. Yvonne Chow, a spokeswoman for the financial app, talked to the House Banks and Banking Committee.
It seems like there's a lot of miseducation on this area. And
on that point, EarnIn's Silicon Valley representative was right. These apps work in a gray area of finance. EarnIn is an app. You download it and you connect it to your checking account. EarnIn doesn't have access to your paycheck, but instead it looks at your account to make sure you get a regular paycheck. Then it gives you the money requested. Now, they will say repeatedly, this is not a loan. A loan, they say, requires mandatory fees or interest charges. EarnIn instead asks for a voluntary tip, but you are charged a fee if you want your money faster than 3 days.
They claim that it's a way to get a payroll advance so that you can get access to money you've earned, and they claim that it's voluntary to pay them a fee. But what we found is that that's not the case.
The National Consumer Law Center tracks groups like this, but the center writes that you have to opt out of this voluntary tip. Here's an example, an already populated $11 tip on $100 of your paycheck advance. Many use the $4 expedited fee to get that money faster, and then they say free comes out to 498% APR.
In Georgia, the average tip is $2.24, and about 50% of transactions don't include tips at all. About 18% of folks have never tipped in 2022.
Here's another hiccup. Folks are low in cash. Then these fees and tips are taken from their checking account, and that is when the overdraft charges begin.
A lot of people have been harmed because they didn't realize that EarnIn was going to do that, and they might not have sufficient funds, and then they're getting charged overdraft fees, sometimes several overdraft fees in a single day.
Remember, EarnIn and apps like it are third-party apps. They don't actually have your paycheck. They're not in any way associated with your employer. These fintech products have been the subject of class action lawsuits. Ms. Chow addressed this with Georgia legislators earlier this month.
People thought that if they used EarnIn, then there was some sort of agreement made with the banks that there would be no overdraft fees. But as we all know, the overdraft fees are bank fees. And so now, after that settlement, we have made it very clear on our app that if you use EarnIn, you may still be charged a third-party bank fee.
The consumer watchdogs who got payday loans banned in the state of Georgia are on high alert over this new and emerging industry.
And you keep borrowing, and you're trapped in that cycle of debt. It's an endless debt trap, just like it was with payday lenders.
A lot of employers actually offer early access to your paycheck. And they've got your paycheck, and they do this for free. It's generally for emergencies with limited opportunities to use it each year. Ask your employer about this possible option.
Okay, so I want to make sure I've got this right. They give you money, but they're not a loan, and they advance your check, Dana, but they don't have access to your check.
That's right. It's confusing, right? It's very confusing. That's why both sides are looking for a definition for this thing, but they're looking for different definitions. They do not want to be called a loan system, because then there's a cap on how much interest they can charge. That's the way the payday loan business, emerged and then got squashed down. They want to say that they do this for free. They do it for tips so that they don't get caught up in the legal definition, which would put them potentially in the payday loan area.
Gotcha. So those buzzy words matter when
The
you're
buzzy
talking
words
about
matter.
the difference.
Yes, and in fact,
yeah.
you know, the state senator who was talking about the sponsorship of the bill kept saying over and over, well, let's be careful. Let's not call this a loan.
Interesting.
Because he does not believe that this is considered a loan. Watchdogs say it's absolutely a loan.
Okay.
So we will see. This is not the end of this conversation for sure.
Yeah, well, and if all these popping up, you're certainly right? We're going to continue to hear more and more and more about this kind of thing.
Yes, and there have been class action suits. So Google these type of apps and see what you think.
Gotcha. Have a good weekend.
Thank
Enjoy
you.
it.
Thank you very much. I'm
Enjoy
ready.
it.